This is the story of the most expensive 45 minutes in Wall Street history. No fraud, no crash, no villain, just one piece of forgotten code, and a mistake that vaporized $440 million before most people had finished their morning coffee. In the summer of 2012, Knight Capital was a giant. On a typical day, it handled around 10% of all the stock trading in America. If you bought shares from your kitchen table, chances are the order passed through Knight's machines. It was fast, it was trusted, and it was about to destroy itself. That August, the New York Stock Exchange was launching a new program, a new way to route everyday retail orders. Every big trading firm had to update their software to handle it. Knight had just days to get ready. Their engineers wrote the new code and prepared to roll it out across 8 servers. But when the update went out, one server was missed. 7 machines got the new code. The 8 kept running something old. A dormant function called PowerPeg, buried in the system for years, switched off and forgotten. And in the new code, a single flag, one that used to trigger PowerPeg, had been given a brand new job. On 7 servers, that was fine. On the 8, it woke the sleeping giant. At 9:30 a.m. on August the 1st, the opening bell rang, and the forgotten server came alive. PowerPeg began doing exactly what it was built to do decades earlier. Fire off orders. Thousands of them. Then millions. It bought high and sold low, over and over across more than 150 different stocks, with no breaks and no off switch anyone could find. Inside Knight, the alarms were screaming. Engineers stared at screens they didn't understand.
Sir, the system is failing!
Every single minute, the company was losing around $10 million. They tried to fix it, and in the panic, one attempt made it worse, spreading the broken code to the other servers too. The machine was faster than the humans trying to stop it. By the time they finally pulled the plug, 45 minutes had passed. Knight was now holding billions of dollars of stock it never wanted to buy. When the dust settled, the loss was $440 million, roughly 4 times what the entire company earned in a year. Gone before lunch. Knight's shares collapsed. Overnight, the firm was days from bankruptcy. It survived only by begging its rivals for an emergency rescue, handing over most of the company just to stay alive. Within months, the giant that had moved 1/10 of America's stock market was swallowed whole, and its name quietly erased. Knight Capital wasn't killed by greed or fraud or a market crash. It was killed by one line of old code that nobody remembered to delete. In a world run by algorithms, that's the quiet lesson. The machines only ever do exactly what we tell them, including the things we forgot we told them.